Hey, welcome to the closing beat, everybody. Happy Wednesday. How you doing? That's my YouTube voice. Hey, welcome. I don't really sound like that in real life, right? Oh, we are financial advisors here at Jazz Wealth that really don't try to put on a show. We try to teach. That's our biggest thing, right? If we could teach you how to grow your money smartly without trying to get commissions out of you and all this sneaky crap, then yeah, you'll be better off, right? All the other advisors go for clients that have millions of dollars because they want to make a lot of money. My thought was, let's go after lots of people that don't have a lot of money, but then help them get a lot of money as they grow. And wouldn't that be good for business in the long run? It's the long game. That's the game I play here because I have nothing else to do, really. This is it. This is what you have. This is my life. Anyways, welcome, by the way. If you like what we teach you here today, you know the drill. Subscribe. Thank you. Check us out, jazzwealth.com. Thumbs up, funny mom joke or something. Whatever works for you works for me. I just appreciate the support. Appreciate you guys being here. Wine and Wealth. That is a class that we do every week for clients every Thursday night. That'll be tomorrow night. We are going to take a whole bunch of data about your dollar as it pertains to buying a house, the buying power you would have, and or the mortgage payment that you would have to see where you stand, right? It'll be really cool. Be short, but it'll be really cool. I got a lot of cool things I want to share there because as you know, interest rates are going up. Home prices, not really falling yet. Prices are dropping for people that have active listings. Those are, you have 80% of all listings out there have dropped their price at least once. So maybe we're moving in the right direction. We'll see. Anyways, that'll be tomorrow. Our FinTips videos we do that are live, 1 o'clock every day, or not live, they're posted every day at 1 o'clock on our YouTube channel right here. They're free. You can check them out. Today was Eric's video. He said, "What is $1 million enough for retirement?" He's trying to make the case using some data there. Tomorrow, I will be talking about, my FinTips video will be about a tricky little, what seems like not a big deal in the Secure Act that still pertains to 2022 that would really help with your 401k. If you're someone that is an employee as well as the owner of the company or some owner of a company, there's a little thing in there, a little fine print that at first glance you go, okay, no problem. But if you really think about it, there's a strategy there. So I'll share that with you guys tomorrow. Anyways, let's get started today. Today, existing home sales come out, like I just mentioned. It's moving a little bit south there. Existing home sales down over 5%. Really what it means, I call this an in-between report. So if you want to know, should I pay attention to this housing report that just came out? Not really. It's an in-between report. It's not telling us anything about the future, but it's not looking back and saying it's bad compared to where we were. The housing market continues to be tight is essentially what it says there, but there's also less buyers. Interest rates are higher there. We can tell this because total sales were down 14% year over year. That's not good. Again, it's an in-between report because there's some good, there's some bad, but there was no real direction going forward. Yes, we have a softening real estate market in terms of buyers that are out there, but we also don't have a lot of inventory. There's not a lot out there. So there's not much to tell by that. It's really the simple way to say it. Was that simple? All right, the S&P here today. Let's take a look. So we got the S&P manages to continue some of its momentum from yesterday. It's a good sign. Not a lot, but still there. More emphasis was placed on the large cap, more heavily weighted stocks in the S&P 500 today. Those are your stocks that you all know, right? Microsoft continued a little bit higher here today. Meta, continued higher off the lows. Nice to see if you've had that for a while. Amazon finally getting something done here. The S&P now has driven itself outside of a technical range. So technical traders look at the last month and say, I don't know what to do with this. We've got a higher low. That's exciting. We didn't make new lows. But now that we've moved outside of this range, it's a little bit more interesting. We're still down about 17% year to date. But hey, since the start of the second half, you want to sound smart in front of your friends, since the start of the second half here, we're up about 5%. That's like 20 days, but still sounds interesting there. As far as the market goes today, there was a quick blip this morning. Now that was really due to Alphabet. They're just the latest to report their hiring freeze there. So we started off a little bit lower and gave ourselves a good rally throughout the day, a healthy pullback, and that ultimately didn't do too bad. Not the greatest of strength days. We're not complaining though. We're moving in the right direction for the bulls. They're happy to see that. Today, mostly it was the chip stocks too. If you want to look at industries that performed really well today, it was the chip stocks comfortably back above their 50-day moving average, thanks to Washington, D.C. putting out a subsidy plan, a motivational plan that includes a bunch of dollars for chip companies to go make some more chips here in the U.S. Of course, that's what we're trying to do here. If you're looking, you want to throw a quick congratulations to the Pelosi family. NVIDIA, the biggest gainer today. That happens to also be their biggest position. Wow, good for them. So a round of applause for the Pelosi family for scoring big yet again on knowledge that's insider but somehow not illegal. Oh, man. Looking around the markets here, you got the communication services. You'll notice to be one of the better performers sector-wise, but that's largely just due to Netflix. We covered their earnings yesterday on this show, so you know exactly what's going on. Also, a little help from Disney. Yes, that's a communication services stock. Healthcare took the day off today. Well, most of those stocks were down. Pretty much all of them were down on the day. You had earnings coming out throughout the day, and although earnings were good for those, I'm not complaining with the names that came out. It all resulted in lower prices for the response to those earnings. Also, you got Tesla earnings after hours here. There's not much to say that's bad. It just, margins were the issue. Growth is there. Earnings were there. The EV credits were there for them. All is good. You read the headline type numbers you're looking for. The problem was just margins. They were 28% versus 33%. And that's been hurting stocks. That put a cap on Tesla's performance here today. I really believe that after hours. So we'll see what tomorrow has in store. But other than that, you could either A, say that people have factored in all this growth because the growth is there, earnings are there, we're all excited about that. So either that has been factored into the price given the current environment, or people really are putting an emphasis on margins. I told you before earnings season started, there would be an emphasis on margins, and that has, at least at the moment, put a cap in it there. So what do you think? Get your questions here in a minute, but what do you guys think? Did that put a cap on that? All right, let's take a look at the Nasdaq. Back above the 50-day moving average after 68 days below. That's not horribly odd. You got to go back to January of 2019 to actually find when the last time the Nasdaq spent more than 68 days. Actually, it was exactly 68 days below the 50-day moving average, which is my blue line here. Coincidentally, that was also when the Fed was tightening. Wow, seems to be a correlation there, huh? December 2008 was the last time it traded below the 50-day moving average for more than 68 days. It was, in fact, 74 days. Since my day of birth, there's only 7 other times where the Nasdaq has traded under the 50-day for longer than what we just had to sit through, right? So it's kind of unique. You did it. All right, let's give you some data here. What does the Nasdaq tend to do after it breaks above the 50-day? After a prolonged period underneath it. So in other words, a downtrend, a long downtrend, what happens afterwards? Well, here's what we're going to show you here. First, we're going to look at all the times that this happened, 1990, 2001, again in 2001, 2, 6, 8, and 19. And what I'm plotting is what happened the day after it broke, what happened the week after it broke, and the month after it broke. Do you see anything here that makes you excited? There's not much, right? In one instance, we were higher in all cases, then lower in all cases, then split, then lower, then higher, then lower, then kind of higher, right? There's nothing to tell there. So that's not a data point that we would focus on. You would not be an investor in the Nasdaq right now comfortably. But if you go out further in time, here's 3 months, 6 months, and 1 year. Now we're talking, right? So when the Nasdaq breaks the downtrend, like it just did right in here, it tells you there's no hurry. There's no hurry to you diving in and fearing that you've missed out. The next month, give or take, is going to be a little bit choppy while it gains its footing in there to get rolling on the way back up, hopefully. Over 3 months, 6 months, and a year, it has proven worthwhile almost every time for you to get in there and make something of it. So I thought that was really cool there. Just keep in mind, there's no hurry. All right? You got it? By the way, I should point out, the Russell outperforming everybody here today. Small cap growth stocks was where all the excitement was. Small cap growth beat every other factor in the market. It beat the large cap growth, it beat mid cap growth, it beat mid cap value, index, small cap index, all that stuff. It was the best performer today. It beat the Russell 3000, which is all the top names in it. So that's interesting. I don't know what to say about that yet, but yesterday it beat, today it beat. It seems that people are saying, I don't think that dollar is going to continue falling, which means the money is better spent investing in companies that benefit from U.S.-based sales. That's the argument at the moment. We will see what happens. Hey, let's take a look here at the dollar because we've been talking about this, right? And I'm going to try to keep highlighting this if we can. It's coming off highs ever so slightly. Today was a little bit stronger there. We talked about domestic versus international revenue. So if you're new to this, let me bounce back over here and we'll show this right here. International revenue exposure by sector. So we talked about that. Don't have to go through that one again. I want to give you a little Econ 101 lesson. So, and 102, ready? Econ 101, companies that report, that import goods to sell here in the States, they're bringing them from overseas, they want to sell them here, they can do this cheaper with a stronger dollar. Okay, who does that benefit? Small cap companies, companies that don't sell a lot of stuff overseas. They're just right here in the States, REITs, right? People that are rehabbing these hotels and things like that is a real simple explanation. Companies that export for sales in other countries, which now we've spent the last couple of days talking about that, they've got to pay more to do that. That means higher cost, which means maybe lower margins, right? So if you're in an economics class, they're going to go through all of that one by one. We've done that over the last couple of days. Econ 102, all right, taking it to the next level there. If you look at the entire S&P 500, all the companies inside of them, about 37% of the S&P 500 gets their revenue elsewhere, right? We're a global nation, right? So 37% of all sales inside of S&P 500 companies coming from somewhere else. What's that tell you? For every 10% rally, let's go to this show you. For every 10% rally in the dollar, that's 3.7% that you would see on their earnings. They would lose to FX headwinds, right? Due to currency exchange, right? So for every 10% higher, we're pulling 3.7% in total revenues off of the S&P. That's why when you see the dollar moving higher, stocks, especially those that have revenues overseas, start to pull a little bit lower. We have to offset the price relative to the revenues that will be missed out on because of currency exchange there, right? Economists, if you're familiar with economists, they basically study the market. They often don't make money from the market, but they would compare a 10% rise in the dollar to about a 1% Fed rate hike. Meaning those don't go hand in hand. They would say, hey, if the dollar goes up 10%, that has the same impact on the economy as the Fed raising rates by 1%. Right? So it's another way to look at it there. This is why you see, a strong stock market when the dollar is weaker, and a weaker stock market when the dollar is stronger. Oftentimes people get confused about that there. So you could think of it as if the S&P, all the stocks in the S&P, had no exposure overseas, then the dollar would be only beneficial to us. It would be a strong dollar, strong stock market. In other words, what companies do revenues here in the States? Small cap companies, right? So again, leading back to those small caps, just having some fun with some knowledge here today. Hopefully that helps you. If it doesn't, or I messed up everything, I've been known to do that there. Hey, let's jump around a little bit here today. Let's do this here. Stocks in the news today. Let's start with J.B. Hunt. So J.B. Hunt's in the news there. They beat earnings by 3%, revenue by 7%. They have some names that they like to use. The stock ultimately did finish lower, but they have some headline sections that they like to report their various indicators of returns for them. One of them is called total loads. All you kids that are chuckling out there, come on, grow up. Total loads beat by 1%. Revenue per load, per truck canister, right? Per box, whatever they call it, load. Revenue per load, 8% higher than expected. Good news there. Total truckload volume, all the truckloads moving around and everything, up 9% year over year. That goes hand in hand with everybody that's kind of reported earnings so far. I think what you see here is the fact that J.B. Hunt already moved higher in sympathy of those that reported yesterday, but otherwise, that's a good earnings report there. Good for them. It's not a very glamorous stock, not something you get excited about, but that's a good one. So good for them there. That was the first stock in the news. Got any stock traders out there? How many of you are stock traders out there? You ever heard of Interactive Brokers? They're a public company there. We've happened to use them in the past. I happen to like their platform. It's very difficult to use and customer service is not great, but if you're comfortable doing things on your own, it's actually really good. Well, they enjoyed the run of stay-at-home stock traders because COVID locked us down and we weren't really working. We were trading the market, right? Is that one of you guys out there? They enjoyed that in terms of overall earnings that they were able to make there. Now that that's kind of over, well, they had earnings revenue missed there by 3%, earnings missed by 8%, total account balances down by 4%. But it's not a big deal for them, right? Because more accounts, even though they were down 4%, account balances down 4%, even though they're down 4%, more accounts were using margin, right? Is that you? You out there using margin? So you're using margin now, which means their margin interest income was a little bit higher. So it wasn't really a horrible report. Yes, okay, everything is kind of bled off from people going back to work and stuff, but not that bad, Interactive Brokers. They did okay there. We'll see what happens with them going forward. All right, what else do we got here? Other stocks in the news. I'll take your questions if you're around here and have some questions there. Let's take a look. The Nasdaq, this is earnings related, right? A lot of activity in the Nasdaq lately. You got a breakout here on earnings that came in better than expected there. They're also doing a 3-for-1 split. Yes, they're doing a 3-for-1 split. So just the latest to report in there. They don't obviously want to be priced that high there. That'll start here next month, it looks like, for the Nasdaq there. Hey, do you like eggs? Cal-Maine. These guys make eggs. They do one thing, and they do it a lot, right? So often they say, well, you got to be diverse and all this stuff. Cal-Maine, been around since the 50s. They make eggs, and that's all they do, right? They don't try to be like superstar people that also breed chicken. They're not. It doesn't matter. They make eggs there. Sales growth. This was a killer earnings. Sales growth up 70% for them year over year. Their metric is total dozens sold. This is actually on their earnings. Total dozens sold. They're just a pack of eggs. There's a dozen eggs in a pack, right? You know, up 6.3%. Selling the devil out of some eggs out there. So that's 272 million dozen eggs that they sold. They're cranking out some eggs, man. They're the largest. They're the baddest in terms of these eggs. Now, they also find that they were higher sales, which are higher margins, in their specialty eggs. People wanting to be all cool and hippie and buy the eggs that are free range or whatever they are. That's awesome. They also reported that their total flock of layers, they call them layers, chicken that are able to lay these eggs, is up to 43 million. They're in Mississippi. They got 43 million chicken just sitting there laying eggs. That's just the chickens that lay eggs. They have, of course, the breeders, and then they have the baby chickens as well. That's crazy. Gross profit for them up 5 times more than expected. Not 5%, 5 times more than expected. They made $195 million profit on eggs. They did see higher costs, feed costs and farm production costs up about 20% there, but total operating income still $147 million. It's fascinating to read this kind of stuff because they're just sitting there collecting eggs, right? They wait for the chicken to lay the egg. There's one, right? 272 million dozen times they did that in the last quarter. That's impressive there. Well, anyways, the point being they made so much money, they're going to pay a 75-cent dividend there, payable to shareholders as of August 1st, and it gets paid sometime in mid-August there if you're interested. Eggs. Who knew? Yeah. I mean, it makes you think, like, I could do that, right? Get into the egg laying business. All right, what do we got? I'm all over the place here today. Last one here, Bath and Body Works. Off lows. Huge volume day. They lowered their guidance going forward there. They got more in line with what was realistic. They had their bar set here. Wall Street was like, what? Hey, no, here. This is what you're going to do. And they said, no, we're going to do this. Well, they came out today and they said, all right, you're going to do this right here. That's where we're going to be. And that's why it was rewarded today, because it was realistic. It wasn't less than what Wall Street was expected. It was just what everybody expected. So that's what you have going on there. Good for them. No new highs or lows today because there was literally only one, and it was a new low. That was Newmont. So if you want to see it, Newmont just made new lows there. Gold overall fell about 1%. Right? I didn't cover that earlier. Just continuing to drift lower there. Oil pulled back a little bit. It was stronger for most of the overnight into the day, but finished a little bit lower on the day. And I pretty much said everything I need to say. Oh, earnings tomorrow. You got earnings tomorrow. American Airlines will be one of the focuses there. Danaher, Dow, Nucor, Tractor Supply, Capital One has been hit or miss lately, but they report. You got Snapchat. Or Snap Inc. Sorry, Snap Inc. And that's what's going on. What else do we have here? Harry says, put them big boy pants on and start buying there, man. But you want them to buy Tesla, though, right? Yeah. There you go. You bought some LI yesterday. It had a good night, right? 36 for Giovanni. So it's been one of those that's been kind of, oh, come on. What's going on here? Been one of those participating better than the Chinese market, right? So relative strength relative to that. You got to look overseas for that kind of thing. So you can't compare it to our stock market there. So you bought at the start of a pullback, I'm assuming. Would you say you bought it at 36? So not something I would have done personally. Let me show you here. So you had a big run and you essentially just bought as a part of that run. So a little bit of chasing there. If you could critique your entry a little bit, I would personally say, fine. If it goes to 46, I'll miss it. But if it pulls back, I'm in. What? We're back. We're back. Don't worry about it. It's good. Don't you worry. I'm right here. Everybody's happy. Everybody's good. I know we're good. That's just how it works. Anyways, that's what I would say there, Giovanni. And I'll go back to this page just in case it's that one there. Kathy Woods closed one of her ARC funds there. We were talking about that today, me and Eric. Yeah. Interesting. She's building like crazy here in St. Pete. Big. She bought a whole block building out there. Very fascinating. Disney was strong today. One of the reasons for communication services to do what it did. Not really a fun fact, but since we're making sure the audio is working here, did you see the on Splash Mountain, one of the boats sank? That happens every now and then. It's interesting, like national news, but you see it a lot here. The Jungle Cruise was the last one where their boat got a hole in it. Somebody was a little big sitting in the back, and it tipped and started taking on water, and the boat sank. But Splash Mountain, yep, they had a boat malfunction. People had to get out, get in the water to climb out. Yeah. Yeah. It happens. Are we back on? How long until we get a Pelosi portfolio? You can actually look it up. There's been people that have been tracking her for about 1.5 years now, I believe. That's actually something. People follow along and say, if you can't beat them, join them. You know what I mean? Kind of sad. Kind of sad there. Carnival Cruise, yes, issuing more debt. They have to, not debt, they are issuing more equity. Because debt's not very favorable. The stock would tank if they said, "Hey, we're gonna raise more debt." They would be paying 100% higher interest rates than what they paid in the past. So they're just gonna dilute you guys and sell off more shares. Saw that. Yep. Think about that. It's been a year. So in a year, think of the money they burned through. Is this the last time they're gonna be selling more shares? Oh, man. I'm sorry. And I should say Pelosi's husband. She has no idea what's going on. I forgot. I need to be better about that. I don't want to insult the lady, right? Her husband is the one doing it. She has no clue what's going on. You can tell that's something that I'm passionate about, right? Anyways, that's what I got for you here today. How'd we do? We good? You got your Carnival Cruise shares. You're going to buy all those shares that they issue for you. It's $1 billion worth of shares, right? What'd they say? Just over $1 billion? Yeah. That'll be fine. That'll be fine. Stock's down almost $1 on that news. Yikes. All right. I'll wrap it up there. I appreciate you guys hanging out with us here today. I will be back tomorrow to do this all over again. And our Wine and Wealth. Can't wait for that one. We'll see you then. Enjoy the rest of your evening. And thanks for hanging out with us.